Perfect. Okay. All right. Good morning. This was very impromptu. Um, just a little Saturday class, just a quick snippets what's going on. If you have questions, I know we had some good days, and then yesterday some bad days too as well. I know there's people asking us like, when do I chase? When do I not chase? Stuff like that. And then just a little bit going over just some different strategies that's available out there instead of just playing zero DTE, or you play a lot of let's say ODT, common shares, swinging options, playing straddle, playing a cover sells put. You may play some cover call. There's a lot of different strategies you can do. Iron Condor, we all know that guy. You know, just a different mindset. And then if you have questions on different stocks and want me to look at for the next few weeks, okay. At any time, just go ahead and ask me on here if you have questions. All right. Everybody have red days, right? Yes, these are some of my red days too. So not everybody's going to have green days. It's just about sizing and go back to basic. It's just about keeping your emotion in check. You have big red days like this, where you lose this much money. The only thing I can say is go back to what how you started in the beginning. You were pretty much had a small account. You were probably making more money playing small versus, all right, I'm the king of the world. I'm gonna bet big on the house. Yeah, when you go big and chase big, this is what it's gonna kill you. For me, this was April of 2025 when it was a Trump tweets. In one day, I lost that much because I was like, I'm thinking there's gonna be a Black Monday. It was gonna be a circuit breaker, 3% down. Guess what? The market didn't go down. Trump tweets, and we went back straight up. I went full ported on shorting the markets, and then I tried the next few days. I just try to gamble instead of taking a week off and say I'm done for the day. I just put more money into the market, and I lost more money. So I can only say is don't revenge trade. If you have a red day, walk away. I can only say walk away. Because if you're gonna try to keep on forcing, making more money, say I lost this much, I think I can make it back in the next play. No, you're not gonna make it back in the next play because emotion will kick in, greed will kick in, your human nature will just kick in. You're gonna feel it. I think we all feel it. Trying to trade, trying to force that one next trade, and then when it does go green, 20%, you should have scaled out. We say, you know what? I think it's gonna go to 100%. That's just what I need. I just need 100% to make this much. I'll be okay. No, you don't want to play like that because if you lose a trade, you should say the next trade should be a clean slate. Meaning, if I'm going to take this play, I'm just going to take my 20% win, get in, get out. I am not going to force and hold and hope I get 100% or 1,000% on the next play because greeds will kick. Greeds will always going to kill you. I know that Saul is coming up with this plan. It's free, available to everyone. He's going to go through different strategies. Same thing. Set up a broker. Use either toss, swap. Toss as the same as swap. Fidelity. Trading View. Robinhood Legends. IBKR. Different apps out there for charting. There's different platform for trading for paper account. There's Toss and Weibo are the top two. The answer is you should have know some terminology. What is a call of puts? What is a puts? What's a call? What's the CSP? What's CC mean? What do they mean by go and buying shares? By playing small cap? What do you mean by 4 a.m. strategy? What is Thursday gap up? CCI, PPI, PTD, buy the dip. Different terminology that you should get used and familiar with. This I would, if you don't know anything about the market, either learn it from Saul. It's all free, part of this Discord right here. Just different strategy for you guys to learn, because trading can be easy and it can be hard as well. It's all part of Wolf that we are trying to give you guys access to learn. Yeah, because a lot of us has been in this road where we were making money, and also we have lost this much money too. So just because you're at Wolf or some other Discord or any other place, or you're on your own, if you have a red day, walk away. Take a week off if you have to. I think in November we had a downsize as well, but then it came back and just make new high. So at Wolf Street, with Salt, he's gonna teach you guys how to different trade. He's gonna go through this whole process. It's free for the next 4 months, 3 months. It's tough. Like, it's not gonna take 3 months. Honestly, we're trying to get you guys to learn all of this in 3 months, but it may take you a year, maybe take 4 years down the road. The answer is don't give up on yourself. We all want to be on this left side. We want to be here. We want to have 200% win, 25%. You want to have 1,000% win. We want to have these massive green days, but we're going to run into this too as well. There's nothing we can do about that. The only thing that you're capable of is read the charts, have more green than red. So let's say I have a red day. I'm down 30% on this play. Let's say I take this, and I'm down 30%. When I do take profits on a long-term swing, where should I take my profits? Do I want to take a profit at 5%, or do I want to take it when it hit 50%? Or do I have more room to hit 100%? But yes, if you do hit 100 to 200%, please take out some profits. You can leave a runners, because if you lose, let's say 50%, 60%, you need to be able to get more wins on this side to offset all the losses you have on this side. And if you decide to play short terms, meaning you're gonna play SPX, you're gonna play SPY, when do you take profits? The answer is at 30%. You're gonna scale out, protect, and stop at profits or right below it. It's okay to be red like $5 or $10, but you do not let it run to 50% red. Let's say you hit 30% green, you should have at least scale out some and protect it. You can put the stop loss right underneath where you buy it, and if you do lose, you lose very little, but you don't let it go from 30% green to 60% red. That's just, it's a loss. That's not even a wash. We all gonna have red plays. Yes, we all gonna have red plays, but we're gonna have green plays as well. But you need to have more green plays versus red. It's okay to take a loss or to cut it at break even. If you get in and you were red for 60, 70% red, and somehow this play came back and you almost break even, take it, sell it out, take it as a win. Don't pray and hope to make 50% green again. No, that's not a That's not a good strategy. Because if you take this call, let's say you take this put, right? And you hold, and it turned 50% red. And if you decide to just hold it long, it can go down much further. The only thing you can do is just wait for the next play. See, in the next play, you take a 695 puts. Guess what? It came back and break even for you. So this is a win. So just cut it. If you're a red, just cut it. Don't even say, all right, man, I just want to break. I want to make this turn just into 20% green. Oh, I'm going to average down. No, you don't average down on an ODT. Zero DTE, you do not average down. The only thing you can average down if you have 6 months out. Let's say you take this play 6 months out. If anyone look at the NVIDIA, right now, this play is at around 5, almost 100% green on NVIDIA. So you have short term, that's your zero DTE. You know your risk tolerance. How much do you want to risk? We all want to hit 800% on a massive day but realistically, just be happy with 20%. If you have a red play, we're all going to have red play. That's fine. But the runner should be the one that hit big like this, not the full size. You don't full size in 40,000, hoping to hit 800% on just $42,000 of money. Yeah, I mean, I would love to put $42,000 in a play and just hold a hit 800% or even 100%. I would double my money and I would be done for the year. Realistically, that's not going to happen. You are going to lose more than you win. That's just human psychology. I know this is all our goal and our dream to have 1,000%, 800%, 500%, all green across the board, all plays. But in reality, this is where most of us are at right now, at almost every single day, just to be a little bit green. I know we all want a big, huge hit, huge, big plays, tons of money. That's a home run. That's just once in a blue moon, you're gonna hit that. But that not be your realistic goal every single day. That just the runners hit or overnight somehow some news came in and you just got lucky. We all get lucky someday. We're all gonna get hit that. But your reality is you're gonna have red days. You're gonna lose 18, 20%, take your loss and move on. But then you're gonna have green plays too as well. But if you look across just you have 5 green plays versus 4 taking loss on 4 small red plays. These green plays will cover these red. So if you hit 20, 30%, you're like, you know what? I'm just going to cut this. Take the loss and move on because these green play will cover your red plays. If you hit 30% and you hold and pray, it's going to go down to 60, 70%, 80% red. At that point, that play is no longer viable. That's just a loss. Just be happy if you break even at that point. Okay, now we happen seen what happened with gold in the last 2 months. Silver, same thing. Copper. The answer is when do you start? Usually it's like why do I season? When do I start? When do I start sizing big? Like I'm risking just $700 contract. I'm risking $650 contract. And then all of a sudden I'm risking only $70. You have to know the answer is when and why. Like, yeah, I'm going to be green. I'm going to chase and ladder just all the way up. I'm going to milk it until I lose. Yeah, if I'm going to lose, I will accept that. So the next slide I'm going to show you real quick. Let's say I'm in goal or I'm in any particular play and I'm going to keep chasing it's like going up like MU, SNDK. We all seen what MU have done from the last good earning it had at 240 to 285 to, and now it's over 450. Yeah, I'm gonna keep on chasing it. People will chase it all the way up. At some point, it's gonna come back down. We have, if you love the stocks and if you think it's gonna keep on going, go ahead and chase it, but you have to know your risk. If I'm gonna chase, if I like this, even the 27, I'm chasing at $700, almost this expensive contract, $700, and I still hit $20, in 2 days. Actually, it ran over to $2,700, if I help them. But if I do give it back, I'm okay with that because I'm just looking the positive side. For the day, I make 41,000. The next day, I give back 10,000. I am not going to revenge trade. I'm just going to look back through the whole week and say I am green for the week. I won 40,000. I gave back 10,000 on Friday. I am up 30,000 for the week. Just look at it like that on a bigger scale. Don't be tunnel vision to say I lost 10,000 on Friday. If you think like that, you're going to have a really bad and crappy day and a crappy week. You have to think long-term survival. All right. So here's is why I say I'm going to chase. If I see gold, someone slapping $365, $159 million, all short terms, this is unheard of. This is like crazy, $500 million in gold call. And this was on the 27. Same thing with silver. So when I see this kind of money, I'm gonna chase it. I'm gonna chase it expensive. I'm gonna buy the 365. I'm gonna chase just 360. Like that's and then all of a sudden on Thursday, I took a really cheap gold call at $70. I mean, right here I took 2 gold call because I'm seeing this right here. And right here, same thing. I'm seeing on my flow charts. I am seeing that they slapping over 100,000 contract, and still was gold was at 444, and they are slapping just out the money 2 weeks out, and they slapping $100,000 contract. And right here between these two, as almost $500 million, $500 million right here. Yeah, they took profits. They sold these two, but they added more on these two line. Because the guy they sold 460, he rolled to 465. Same thing with this. Someone bought 470 brand new. Yeah, I'm gonna risk my gold call. I will risk it. I will buy the expensive $7 contract. But if I'm not seeing flow like this, I will risk only $70. Meaning I'm gonna risk it for the biscuit. Meaning I don't, if I lose $70, I'm okay with that. So when you see these kind of huge money that people are buying up for February 6th call, it was 444 and they bought 465, 470. I took out, I'm taking the 485 because it was cheap. It was 130. And we saw what gold did, because this kind of money you have to chase it. This kind of money you see this, yeah, it may not work all the time, but 8 out of 10 you are gonna win. Because when you see just kind of huge $500 million in gold call short terms too, you have to take it. So that's, if I'm chasing gold, if I'm chasing silver, just know the difference between sizing in big versus sizing in small. Meaning if I'm sizing in small, I'm going to lose that money. Meaning I am chasing this until it milk it until it dies. If it dies, I'm losing $70. But I cannot, lose a $700 contract overnight. If I took this gold call on Thursday, I would be down $700, like just in within a day or two, within a day, actually half a day on Friday. So that's how you read the flow, either from Flow God or from anyone. If it's stick out like a sore thumb, chase it, but don't chase it. At some point, you have to stop chasing. When you don't see this kind of money, if you see this kind of money and you are red, just average down. Like my silver card that I bought was red. I averaged down. I bought from 11 to 17 contract. I added more to average down, and it went green in 2 days. I was happy. I was like, what? I'm green. I'm just gonna cut the rest at break even. So here's your short-term plays. Meaning, if you're playing zero DTE, the pro is you're gonna make quick cash. You're gonna be in and out. But then again, you can also lose a lot of money real fast. It's almost like gambling. So we all know about zero DTE. Also know that what are you capable of? Are you at work? If you have a job, a 9 to 5 job, and this is your source of income, keep your job. Don't worry about the zero DTE. If people hit 1,000%, 800%, or they smashing it, stop thinking like that. Thinking about your long-term futures, meaning you have a 9 to 5, your family needs you to have this job. You have a mortgage, you have a rental, you have a car payment, whatever, or bills. Keep your 9 to 5 job. Don't FOMO and don't try to play zero DTE. If you don't have the time to play it, if you can't watch the market every 3 to 5 minutes, and if you keep watching 3 to 5 minutes, you're not going to be able to spend time with your family, your loved one, because you'll be on your phone all day long, just to make a few bucks. You're going to make money too on the long-term swing. So a long-term swing is meaning I'm going to buy either options, shares, or I can do some other method. I can do a straddle, or I can do a cover sells put, cover call. It's up to you. It sells premium. But by buying shares, as long as it's a strong stocks like Nvidia, Microsoft, Amazon, at some daily oversold, a low CCI, buy it. You know what? If it's go red, slowly add in a year. Like Robinhood right now it's at $100. Yeah, can it go down lower? Yes, it can. But you know that Robinhood is a real company and has real investors. There's consumers using it every single day because of Bitcoin. What it's doing right now, it's going down, but eventually at some point it's going to go up. When does it go up? We don't know, but it's going to be soon. The answer is, can you start slowly adding? Like right now, it's almost at the daily oversold. Can I start slowly buy it in when it does hit the daily oversold? Do you want to put in $1,000? If you have $50,000 account, you should at least put $1,000 in. And then, if it go down red, $200, $50, keep, at 30% red, maybe, you love your stocks, average it and buy it up. Don't buy on stocks as penny stocks that have no revenue, no income, run on a meme status. Meaning you're going to be your rock, buy it up, just buy and then walk away, go back to your work, spend time with your family, go out on vacations. Your money's there. It's not going to do anything. It's just going to be there. Buy a 1-year contract out the money. That's what I do with CPNG yesterday. It's 12 months out. Yeah, I'm not, as it might be red. I'm okay with that. I can average in. I can make money elsewhere. I have my 9 to 5 job. I can make money. I have extra source of income coming in. I can put it into my portfolio. I can reinvest into it. Yep, I can help you with that. So just I like long-term investment because I may play 1 or 2 0 DTE. I will make money. If I like the stocks, I'll play 1 or 2 or 3 play and I'll be done for the day. And then I'll just go have lunch. I have a long lunch. I just go back to my work. Well, but if I don't have the time, I'll just invest in really long-term play. If I have a red play, buy shares. Shares you will live long term, even though it might be downtrend, it will come back up again. This is, like I know Ben, he does this a lot. He does his buy daily oversold or the low CCI. I use the CCI more than um the RSI. So this is a passive investor from I consider this as a long-term Roth. If you can beat the market, because if you put your money, let's say you have a huge account, right? And you put into a CD or a saving, you are gonna make about 3% or maybe less than that, you know, in a year with your bank. Or you could give it to a financial advisor and they invest for you, but you have to pay them commissions. They will give you about a 12 to 20% rate of return per year, which is pretty good. 20%. Some of them do better. Kathy Woods, I think she's up to 65% this year. That's better than a lot of investors, with JP Morgan Chase. If you can make and invest and beat 20% in a year, you are your own financial advisor. I don't care what you do. If you have a Roth, I would advise you to buy shares because you don't have to pay tax on it. If you have, if your companies offer you 401k plan and they tell you what do you want to do, 401k, traditional 401k versus Roth IRA. If you are young, take the Roth immediately. Just put it all into Roth. The pro and con between traditional IRA versus Roth. Traditional IRA, you put your money in, you do not pay any taxes on it. Let's say you make 100,000 and you put 20,000 into your traditional IRA. At the net, when you do your taxes, you are considered at 80,000. That you make $80,000, you will be taxed at 80,000 versus at $100,000 because traditional IRA meaning you put money in, you pay tax down the road, which when you turn 65 or 59 and a half, when you can start taking out. But when you do take it out at 59 or 65, you have to pay taxes on the full lump sum. Meaning, let's say you invest for the next 30 years and you turn into a $500,000 investment, they're going to take 30 or 40% of your $500,000, when you take it all out. That's a huge chunk. Yes, you get, for the next 30 years, you're paying tax at 80,000 versus at 100,000. Traditional IRA give you more flexible. You bring home more cash because you are considered, you brought yourself into a lower, not lower class, but just lower income. So the government will give you more tax back every year. But when you need that money, when you turn 65, 59 and a half, or 60, you'll no longer be able to work like you are young. You're at 65, your retirement, you need that money because you no longer have any source of income coming in. Imagine $500,000 being taxed at 30%, 40%, or whatever, how much money you have. That's going to wipe out half of your 401 your traditional 401k. So I would tell people is go Roth. If you're young, do Roth immediately. So let's say you make 100,000 at the next when you do your taxes, you pay taxes at 100,000. You just pay the full lump sum. Yes, you will have less money coming back home every month. What just make better choices. Just eat out less. Spend less on here and there. You're not gonna feel. You may traditional versus Roth. You may bring home an extra, let's say, $200 per month, maybe $100, $150 per month. Not so for $200, yes, it is adds up. You think, all right, I could have $200 each month that I could, if I was to take traditional IRA versus over Roth. But if you took the Roth path, you bring home $200 less per month. But when you turn 65, like I said, you pay your tax immediately every year. That money that you put into Roth, you paid it at the time you put it in. They tax it, they take it out. That's fine. At the end of the year, they take it. Whatever they take it. 10%, 12%. Or if your income is over 20%, or if you marry, they will charge at your rate. But when you turn 65, whatever you have in that Roth, you keep most of it. You keep all of it because you already paid taxes on it for the last, when you put it in. Imagine you have $500,000 or $1 million at 65 and you get to keep all of it for your retirement versus have to pay 30% when you take it out. Look at that way. So that is your long-term investment. If you have a Roth and you have the capability to invest for yourself, and you can make more than 20% on your own versus giving to a financial advisor, do your own investment. So how do you pick a good long-term investment? Look for stocks that have high dividends, meaning every 3 months you're going to get this money back. Johnson and Johnson, you get a $1.30 back every 3 months, and you invest in them long term. This is a good company. Google, Vertiv. Vertiv is a huge company, or Nucor, whatever company you invest in. Oil, Chevron, Oxy, ExxonMobil, those companies usually have a huge dividends. That's why Warren Buffett invested huge money into oil, not because of the stock, but because of the dividends. I mean, imagine you get 5% back every 3 months. These are some other potential. Just watch out for these one because these are lower. They actually give you huge percentage, but the shares can go down quick too as well. So you want to look for stocks that's either in the low, 20, maybe $10 or 50. Like I said, $50 is my sweet spot, or even a 200, 300. Pick stock that has been around for a really long time. That's not going to go bankrupt any day. That's going to give you passive income. That's easy money. So these are some of my long-term investment that I have. I like uranium in my Roth. It's maybe red, it may be break even, but I'm not gonna worry too much. I have Sound, it's red, I'm fine with that. I have Serve, Rocket Mortgage. It was 13, it went up to 22. I think because of Trump, it's going back down. I have some of the stuff that Trump investment in Lag, Open, Intel, DGT, stuff like that. MBLY. That's my love-hate relationship because of Banana. He's on Twitter. So he kind of got me stuck with MBLY. So I'm just a long-term investor now. So if you ever have a really bad, let's say the next apocalypse or market crash or bear market, we did have a bear market back in November, October, November. It was a semi small bear market, no matter how you say it. We had a bull market. Yes, we did have a bull market, but a lot of the stock dropped 50 to 60%. Hood, Coin, Bowen, BA, um, AMD. You could name a lot of the stocks all across the board. They all dropped 30%, 60%. AMU, same thing. Some of them, and then there's stock that just didn't have any dip at all. The market just keep on going. But we had a mini bear market in October, November. Yesterday, I picked up some CPNG just because if Walsh, let's say he's the director of his take over, and he's the main guy, and he also married to Estee Lauder, EL, and he's also on the seat of United Postal Service, UPS. Now, these are some of the stock that I buy. If they go 100%, yeah, I'm going to take it out. If someone told me when I was in stock investing in long-term investment to say, hey, you should hold this Cabana play or Palantir, buy 150 shares, sell out 100, keep 50 for the rest for your life. I would be okay with holding 50 shares at $8 and they go up to $150. I would be okay with that. If I'm just teaching, I'm not saying, hey, you should just sell out all. I mean, look for stock that you think that's going to be around for a long time. APLD, Iran, Lulu, stuff that people don't think about. Veil, like no one, like I said, $10 stocks. If I'll do a lot of due diligence, and I see that's if I take shares and if I play the options, I'm gonna grab some shares too. I don't need to grab 1,000 shares. I might grab just 100, 150, 100 shares, and I'm gonna hold it. And I'm gonna sell out. Yes, I'm gonna sell out when it hit 100%. And I'll just hold the rest, the next few years. If I held just Cabana play for 3 years now, I would be up $1 million from this. I'll be okay with having 100 shares left. If I sell out, scale along the way, and I hold 100 shares, and it go up to 400, 500%, I would feel so much better that I knew that I had Cabana at $7.86 or $8, and I have 100 shares left, and now it's hit $500 or 400s. That would make my Roth really happy in 2023. So I'm just telling you guys, think wisely what you want to do with your money. You don't need to hit home run every single day. Buy shares. If you can invest in Roth, this is what I did with my kid. I said this one. So this is the baby Roth. I put 30,000 in there, and I'm just buying these show shares. Like I'm just buying it. I don't care how much I put in, what stocks I buy. I'm just gonna look at some of the stocks. I'm gonna buy 100, 200 shares. If I like the stocks, I'm just gonna buy it up. Yeah, I'm gonna play option too. But this is my passive income, meaning I don't have to pay taxes on it. I already pay tax when I put money in. As long as I invest in myself, whatever I make, I keep all of it. When turn 65, or 50 or 59 and a half, depending on where you live and what disability and all that good stuff, you can always cash out early. But I'm just gonna say, let's say 65. If I was able to turn this in a year, and I can turn this into, let's say, $500,000 or $200 million, because if you buy shares, you buy 150 shares, sell out, keep 50. If it go break even, hey, you already win. You don't really care about it. But if it does go red, you know what? You could cut it the rest, but look at it. Don't look at it every single day. Look at it 2 years down the road, or every let's say 30 days to 90 days. start looking at the stock that's red. Do you want to cut them? Go ahead and cut them. That's fine. But don't cut after 2 days. You should buy it and then all of a sudden it go red in 2 days. That is not a good, you know, investment strategy. So how do I know going short versus going long? If you ever look at VIX, that's all you have to do is look at VIX. If VIX is in a low under 15, if VIX is under 16 now, I don't think VIX is gonna go, stay at 15 and stay there. I think 16 is usually your threshold. But if it ever go at 13, 14, buy up everything if you can, and just go buy call, meaning you buy options 6 to a year out, all across the board. 8 out of 10 will go green, 2 of them may go red. That's fine. But if VIX ever crash over $20 or 17, if it ever go up to 20, you go all cash. Meaning, because it doesn't matter if you buy 6 months or a year out on when VIX is above 20 to 80. When VIX is at 50, all your money in options would just go red, no matter what it does with when VIX is that high. And on Thursday, if SPY gap up, remember, if SPY gap up big, especially when it gap up $3 or $2 or $3, 82% of the time it's going to come back down. That's what it did for the last 3 weeks. If you haven't noticed, on Thursday, the last 3 weeks, the market went down. And we saw what happened on Thursday. Now, on September 10th, before September 11th, buy SPX, ODT, 1DTE, SPY call, whatever you want to do. Just buy call and chill. The last time September 11th went red was in 2001. Ever since, there was never a red September 11th day. And then during Thanksgiving week, you know that the market is going to be bullish, especially the last Black Friday week. So if you ever invest in short term like SPY, ODT, or you play into week, if you hit 20, 30% green, take some out, and then protect that profits, keep it at near break even, manual stop loss. If it does hit, just cut, and then, yeah, you can leave runners for that 800, 900%. I have never been able to hit a 500% on a $20,000 options play. I don't think I've ever been able to hit that. But, and for long term, you don't want to take profit at 5% or 10%. If you've taken a 6-month contract, take the loss. If it goes red, take the loss. But don't scale out or sell at 5% green. I will only sell at 5 or 10% green on your long-term swing. Let's say you just bought a Roblox, BLX. It's now 40% red, and if it does break even at 5%, take the win and run. But if you just bought it and you get it right, and you get 30% the next day, hold it. Meaning you get it right on the first play. Meaning you got the reversal. Don't wait until you hit like 100%, 200%. If you think that there's a way to go up like on that to hit 200%, like I said, I want 148 scale out. Like I've been waiting for that 150 and hit 150. If I have to take that first day play win on 30%, yeah, I make green on 30%, but I'm not going to cover for all my red plays. I said I was going to wait for 150 and hit 200%. That's when I stopped selling out. So you have to win more, win consistently to cover your red plays, because you cannot have 60% red and then win 10% here and there. That's not going to cover all your red plays. You want to be able to make more money, because if you are just breaking even after 1 year of doing the trade stock market, might as well just give all your money to a financial advisor. They're gonna give you 20% money back. they're going to make you 12% to 20%. If you can find a financial advisor that makes you 50%, keep them. Don't run away. Take it, throw all your money into that. If that financial advisor that good, he's really good at 50%. Most of them do around 12 to 20. And remember that there are 252 trading days per year out of 365. You don't need to play all, just 252. Have a realistic goal. Meaning, if you make $200 a day, you're gonna have 50,000 in a year. Don't try to hit home run every single day. If you have a $3,000 portfolio, you should be trying to aim for just $100, $200, or even $50 a day, and be happy with that and run away. If you make 4,000 per day, you're gonna hit $1 million in a year. But don't, if you hit your daily goal, don't try to hit home runs and say, all right, I hit 4,000, I can keep on going. Because if you notice, you always tend to give back during the middle of the day. You lose money. I'm not going to cover this week. If you ever have time, I will show. Right now, all we do is we do a lot of single option, meaning we do straight up call and straight up puts. We lose what we put in. That's it. This is the safest option strategy. But then again, the rate of return is huge. If you get, let's say like a silver, you can hit 1,000%. Or gold, same thing. That's just a straight up. But then since you have to hold it, you know what's going on. You just look at the flow and don't follow blindly. But when you look at options, there are many more. Look at that. There's straddle. We've seen the iron Condor. Iron Condor, you buy 2 calls, 2 puts, and it has to stay flat. It cannot break above or below what you put in, because if it does, you lose everything. There's also COBA options. Those I usually need. You need to buy 100 shares, and then with straddle, strangle. I'm not going to go into more detail. This is more of a different week where I can go through each individual options and then how to execute it, because I can talk about it, you're going to forget everything. So I want to save this for a special week. Have some actual screenshot, or we can do this together so you know what you are doing, what kind of income you need. The answer is some of these you don't need $100,000 account. You just need 10,000, 5 to 10,000. You could play a BBAI, that's a $5 stocks, or Sound, $10. Stuff like that. You only need about $500 to 5,000 to play one of that. You're not, Intel, you could play $4,700. You're not about 5,000. So for Intel, it's about 5,000. You're not gonna make 1,000%, but you're gonna have passive income. Meaning you're gonna buy as long as it goes, as long as it stays flat, or as long as no one's looking at this, no one's buying it. It's just really either crowded, meaning it's just gonna go up and then go really down. I mean, it's gonna go flat. If you can get that, find a stock that just no one's touching, like BBAI. I think it's flat since forever. People are gonna buy up the call. They're gonna bet on it, but as long as it's go flat, you're gonna collect the premium. So next week, I know Casey, if you're on here, I will explain, and then we could do this together with just a small income. We can do a quick do a COBA call, maybe CSB or sales puts if we think it's gonna be bullish. Whenever you hear CSB, a COBA sales put, meaning it's bullish. It's not bear, because they want the price to go up, and when it does go up, you collect the premium, or you can buy the shares at a cheaper price if it goes up. So let's say the stock is at $10 and you bet on it to go up to 15, you have two options. You can either collect the premium, you don't have to buy the shares, you cash out, or if you love that stock to go up to 15, you and hypothetically, instead of collect the premium, you bought the shares at $10. So anyone have any questions before I go to charts and show you how to do, like I said, this is a quick free lessons, nothing special. Don't be shy. If you have questions, please ask. Otherwise, I'll go to Todiga, how to use the RSI versus CCI, and then how to use that daily oversold. I mean, some of them can be daily oversold for a very long time too. No problem, Jasmine. Okay, so I'm gonna delete this. Something like you can say you just open up Trading View, or Fidelity or whatever you have. So first of all, you do just the RSI, Relative Strength Index. That's just the free technical, that's nothing special about just one. And then I draw my CCI, Community Channel Index. I should add this my favorite. It's almost identical to your this is my RSI and this is my CCI. So let's say when I bought right here. So instead of using the RSI is good if you're playing SPY, ODT. Because CCI, you don't want to buy when it touched the bottom here. You want to wait. I use the CCI because when it goes way underneath, and it reverse like this, right here, and then reverse above this yellow line is when I want to buy it. Same, almost identical to your RSI. I mean, it's identical chart. There's nothing different between the two. Now, a lot of people like the RSI versus CCI. What's the difference between the two? Because the CCI, let's say this one, it never touched the daily oversold. For the CCI, it did touch this daily oversold here. Like it went underneath this. Like this is where I would buy in. Because if you were to watch the RSI, you would miss this little dip right here. And then here, same thing. Yes, it did touch. It's probably a false bottom. Because when it reversed back up, this is when you really want to take it as going up, because this is the daily oversold. This is the daily oversold right here on the CCI. When it go touch above, it's a breakout again. Same concept, but just like this touch, yes, it's oversold. When it reverse here, around here, you want to buy it closer here. But look for your charts as well, where you see like, oh man, it's down extremely low right back in what is it on the weekly charts. This is better on the weekly charts because it's actually show you when you should be buying it up on the weekly. So weekly and the daily can also be give you a false bottom. So, but the weekly is usually a higher chance that you get it right. You say, all right, this is getting really close. It touched the bottom here. Like this is where I should be buying up. Because if you look at this on the weekly, it's all above. It's not touch this. See how the RSI here, it did not touch that bottom. It's only touched on the daily. Now you go to your weekly, it touched the bottom. Like, yeah, I will buy this up. You know, and you can give any stocks as well. Now Google is the only one that's really terrible because it has been really strong and it has never dipped underneath this 20 EMA on the daily. Like whenever it does, just buy it up. Like right now, it's testing this 20 EMA, but if you ever can catch this yellow line, you should be it's part of that. That's just a signal line. That's all. Either RSI, even this yellow line right here. Sorry to you might are you talking about my yellow line, the one I drew in? That's just my support and resistance. That's all. Because like I am looking for, if I'm gonna buy, let's say Apple. I like Apple just because it's daily oversold. Like, oh, this one, that's just your signal line. That's just your, it's just part of it. That's just your, what's the yellow line? Yeah, it's part of the RSI and the CCI. It's just because this is RSI using the 14 versus the 20 days, but that's just taking a longer time frame. So when it reversed back up, it's like, all right, I'm daily oversold, but now it's going back up to yellow, slowly coming back up. And I'm like, do I bet this is going to be a daily oversold? Yes, it could be a right here. I would buy this too. But right here, let's say I bought this. I'm like right here. I would buy it too. But right here, you got this little line support. But there is that little gap right there. You want to buy below all these candle, not above the candle. The above the candle usually is a breakout. So let's say you want to buy call. Oops. Wrong candle. I don't like this. So if this candle right here, right here. So let's say this is the daily oversold, right? You need the candle to be above like this. I would probably take it too. I would probably chase the call. I would buy it. And I would get killed too. I would. Yeah, I think a lot of people got killed on this Apple. Sometimes it's just a little bit patience because I drew this in. This is my that little chart is a really long term. This is a 2022 chart, meaning it's always break out above here. Like it stick to this red line. That's my that I've been drew in a long time ago. So it's a 2022 trend line. So on the daily, it's sitting underneath this trend line, meaning it's not a full breakout. Because so I would always recommend build a short list. You can have a longer list if you like. I like to keep just a few lists of stock that I like a lot, and I'll invest. I just chart them every single day. Because this is Apple, I know that if it doesn't break into this trend line, I am not gonna buy. If like yes, I would buy this up. This is like a daily oversold. I would buy this up at 259, but I'm seeing this is on my 2022 trend line. 4 years of data. When it does break into this trend line, I would buy call. I just use the default. I don't even change the RSI on these two. You don't really need to change them. You can change it if you want to. You can see how long you want to keep it down to 24, 30. It's up to you. But I just keep the default setting. I don't have to, I'm not going to make it overcomplicated. Maybe some, guru out there may have different, say Eric, because it hit just line. It wants to stay above. Yes, it's right here. I might have bought call right here. Sometimes I miss out. I play a lot. I play everything, but there's some stocks I will watch. I know, if I see some stock that I just saw in a day or two, I'll just buy it up just because there's news, momentum, there's flow. I don't know anything about it. I'll just chase that. I'll buy it. But if I know just stocks doesn't have any flow, like Apple didn't have any flow, it hit the daily oversold. Like I know it's right here, completely at bottom, and it's on the sitting on the signal line, on this yellow line right here. So it came back down, retest for the second time. You always want to get by on a second retest, and then if it's a green candle on a second retest. So if this is the dip, right? Let's say it's dip and then it bounced. If this candle was green, I would take it. So you always want to wait for the dip, the bounce, and then the second retest. I always take the retest. Same with Roblox. I thought that was going to bounce too, but then I got hit with some really bad news. So here's your CCI and your RSI. Daily oversold. Use them to, with trading view, put them together, put the RSI with CSI. Buy it when it break above the yellow signal line right here, which is also identical to this. And don't get caught with this fake breakout, because yes, it's above this. It needs to go back into its 2020, 3 years of data on the Apple Play. So I rather wait. It touch yes, go to your left and see. Oh, hey, it's staying right above this candle right here, this little gap zone. Because you see this little gap right here, it came back down to fill it. Daily oversold. That's why we take this little play. So, it may not work, but if it does work, you're gonna win. Like RBLX, I thought it was gonna same thing too. It bounced, bounce here. It came back to retest this. I was like, it dip here. It bounced up and then came back down to retest. Trying to curl back up. I took the call here. Like it's underneath my CCI. Like it touched my daily oversold because it got hit with Europe, that lawsuit with pedophile. So that was that's something we can do against the news. So that, and now here's on Thursday. So for this is the third week in a row. Thursday, SPY gap up overnight.
Mama bear.
Hey, it's Brenda.
Mama Boo.
It is really chaotic here at 8 a.m. Like, I can never get on at that time. I'm just telling you, like, it's just too chaotic.
No worries. We can always uh you can always yell, the kids can yell. I think most of us have kids, so you know.
Not like these, not this young that are this crazy.
You'd be surprised.
My son is screaming because he can't find his slime. And I literally told him it's wherever you put it. He wants help. It's just, yeah, just don't mind me. I'm going to have to mute myself constantly. My 2-year-old pooped. She's saying it out loud. So, yep, I'm going to mute.
All right.
Sorry.
No worries. Thank you, Mom. So here's Thursday. Remember that 82% of the time, why Thursday? I don't know. It's always a Thursday. If SPY have a gap up, and we hit the, right here, it's already reached the yesterday high, meaning there's not much room for it to go up. So all you gotta do is look to your left. So if SPY was to gap up to here, you just grab the puts. You just take the puts and wait. It's gonna cover that gap right here. So that was at 800% gap down. I think it was like 1,000%. And then Friday, it's pretty much, it did move $3 and it up and down in both directions. You can see this pattern right here. See the big red candle followed by this green candle right here, meaning it's usually gonna bounce back up. It's like almost like a dragonfly, but it's a morning star. I know some people look on the 5. There you go. That's a fly on the 5. It's almost like it's a dragonfly. No, it's not. It's a morning star because the candle there's a little wick in the candle at the top. But it's almost like a dragonfly. Know your candlesticks. Watch the 5 minutes for a trend, and then go to your 1 minute for entry points. But if you see this candlestick right here, that's always a bullish candle. When the wick is at the bottom, meaning you're gonna wait for this candle, come back down to here. If you grab call right down here, you could take it all the way up, or you could take the breakout. If you play small cap, you take the breakout, which would be right at this point right here. Now, if you were to play on using both the RSI, the CCI, because you lose the CCI, you see it's way above this on the 1 minute on.
Corgi.
Yes.
I need you to Google what a morning star is,
Versus
because
the
that is not, you can either call that a hammer or you can call that a dragonfly, either or. But the only thing that really matters is like, that's a bullish candlestick. Sometimes candlesticks are just candlesticks, but if they are at the bottom of a downtrend, they signal reversal. If they're at the top of an uptrend, they signal reversal. If they appear in chop, they are just chop.
Yep.
Yeah. So morning star looks like a doji. It's like a fat bodied doji, meaning there's a wick on the upper side and the underside. Not really a significant candle, but your dragonfly, your hammer, your shooting star, your gravestone, which is basically the same thing. It's the same candle, just flipped upside down.
Yeah.
Yeah. So the only difference between, dragonfly and hammer is the shadow is bigger. So the shadow is bigger, dragonfly is thinner. That candle looks like dragonfly and hammer had a kid, basically. But it's just like learning how to understand the wicks and where they appear is the most important part of understanding how to read candles, because you can get fooled and see a gravestone and chop and be like, oh, puts, and it's not going to work. So it has to be at a significant place, either at a level, top of an uptrend, or bottom of a downtrend.
I'm looking for a shooting star on a daily. I know spiders is could be both in the same day.
I could find you one real quick. Hold up.
Don't worry, I'm trying to get Mama to teach us a class on candle, because she's a candle whisperer. I'm looking for that too.
It's only because like I was chatting with somebody, I don't even know who. I was chatting with somebody yesterday while I was working. He was just messaging me like, what do you see? I see this. And I learned to read candles because I'm working while I trade. And my EMAs and my candles, like I can see them from far away. I can see them if my phone is wet, if there's dog hair on my phone. Um, they're significant because they tell me there's a trade available, if that makes any sense. I will watch chop all day and not touch it. I will also trade chop if I have time. But I learned to understand and to read candles because I work and trade at the same time. Now, I use the EMAs because of all the other indicators I've ever used. The way the candles respond to the EMAs gives me entries and exits. So just so you remember, like my perspective is from like a day trader that's pretty much working while I'm trading, working with animals, washing them, drying them, cutting their hair. So it's really simple, but nobody can really teach you how to read them. Like you have to study and practice and watch. I think watching seems like a waste of time, but that's how I got to where I am, like 5 years of watching. But I will put a candle class together for you guys, I promise. Everybody's sick. I don't have time. It's gonna be a month or so. Because I don't just want to slap it together. I gotta mute myself.
Okay, so go back to Fibonacci. Let's say a stock breakout, right? And it's at all time, it's breaking out, and it's like, okay, when do I start? When should I buy back? So you go to your Fibonacci level. I'll delete this really quick. Fibonacci. That's the wrong chart. That's a different Fibonacci retracement. Okay, just take about 2 months of data, and you flip it from the top going down, from wherever it's high going down. Meaning it break out here. This is like, so say this was in November when it broke out from the earning. It make all-time high. There's some dips, and you say, where do I want to buy back? Most people buy back at the 23 to 30 to up to the 61 line. So this is where you want to take it, from the 23 and the 61. Some people buy the 38 to 50, but majority would take the 61 and the 23. So what you do is go to your Fibonacci retracement. Take this, so you break out right here. Go back to about 2 months of data, or 3 months. Find the lowest body you have, or even if you want to take it, right here, 3 months of data. That's fine. So you want to wait. Most people wait for the 23 if it doesn't hit, but if it's at the 61, near the 61, they're gonna buy it. So at the 61 line, see how it came back? Test, but it held to 61 line. There's 3 months of data. So when it does break out, you could say, how high does it go up? You grab the extension right here. You have the Fibonacci retracement. That's just taking where to come back. You wait for the 61 line or the 23 line. Some people buy the 38 to 52. That's fine. But I know Doc Chrissy, he likes the 61 and the 23. That's his 2 line that he always buy off. So you know what? I'm going to go with whoever's, they know what they were talking about. So I would do that. Now, when it does break out, you say, how much data do I need for this one? This is your high body. You only need about 2 to 3 weeks of data. The Fibonacci, you can do the whole daily all the way 2 to 3 months, a year out if you want. I tell people not to go that far out. Just take about 2 to 3 months out. That's it. Fibonacci on these big cap, 2 to 3 months. That's all you need. Now for the extension is about 2 weeks of worth of data. So for 2 weeks of data, you take to here, let's say it break out here, and then pre that candle. That way it broke, to the top of this line. Take about 2 weeks of data. You don't need to go back, a week, 2 weeks is all you need. So you're gonna wait for a retracement at the 61 line. You take it down here. The 161 is your point of exits, or even usually people at the 260 is really high. I mean, 427 is just crazy. But see how it's max out at 427? Both line max out 427 on both the extensions and your 5th line. Now Google is the best chart of them all. Since May of last year. You see how Google always, if you look on the 4-hour time frame, you see that it dip here, always at the bottom line here. It does go down lower, but it's always bounce back and hold this perfect trend line on the 4-hour time frame. And if you look on the EMA, it's even beautiful. It's really beautiful in the EMA. So meaning it's always at this line right here in the middle. It's for the longest time, 3-6 months. It's always, it this line. It's always come back down to test here. Break earning and news, it bounced and broke out of this trend line. So I have my secondary since August earning. There's always going to be a little dip here, but it's right here at this point under 4. Now so this is right, I want to say, this is January, December, 2 months. Okay. Close enough. You see that little candle, that body, that's 2 little candle at the bottom. You can do just this is too short, from January to December. That's only a month data. You take about, January to November. Take the bottom candles right here. There's 2 little bottom to wick. The bottom is, you can go down all the way down here too. That'd be fine. To October. You could go all the way down here too, but so what you do is you want to wait at the 61 by like this line, 2 months of data, because this is your trend line. So you want to wait at this 60 line. Close there. So at 315, 316-ish, the distance hit 320, lowest, no, low 319, 320, so it's about $5 different. You're never going to get it perfect. I mean, you can make it perfect by taking the bottom of this candle, but that's just cheating. I mean, some people say the Fibonacci don't work. Just get close as you can on the retracement at 618. Just average in, use your trend line on Google. It's going to come back down here. So you take the bottom of this, going up here. And so we are aiming for 429. Yikes. Well, I think 360 would be your ideal right here at the 160, 366, and then to 426, 360. I think that's the next support for Google. And then between 420 and 450 is your next line. So with earning, that's going to be a big, three days, sir. Wait for 3 days.
Corgi, pull up Unity software. Pull up you.
Okay, I will. Someone asked about
After
Microsoft.
this.
Okay.
After this. Yeah.
So that earning, wait for 3 days for it to consolidate, and then on the 4th day or the 3rd day, watch it to take it back up. It's almost on a daily oversold. It's been on a daily oversold for a long time. So, but this one has a historical data. On the daily, that trend, that parallel, I like this parallel line. If you can ever find it, use this, and then scroll out. Look to the look for like trend line where it's bounce off support. If this is an abnormally where it's all by itself, it's usually probably a Trump or some catalyst cause it to go down all by itself. But majority of the time, it's bounced up from here, October 2023. But it's always on this parallel line. You see how it's always on this. There's 2 of them. On this line, I would take call and bet on it. But if it goes down, if it stay on this line, I'll take call. But right now, because of the bad earning, it's just going to make new low to just, it's going to create a second trend line. What I mean by that is, you don't have to be exact. So if this didn't hold, it's going to be like it would find like a new bottom. That's what SPY does a lot. It goes up a lot and then come back down to test to make a second trend line and go back up again. So let's consolidate. Day number 3. So these are my RSI divergence. Okay, it's closing. If you have the ISI divergence indicator, it will tell you if it's going to be a bullish or bearish. It's actually, it's give you a cheat sheets. But then again, if you took the call right here, it just want to make new low. And then when it tells you here it's a bear, so like I said, this RSI diversion indicators, it's usually a false indicator. Yeah, like I said, this is your RSI diversions, your RSI oversold, daily oversold. Meaning you want to buy when it's extremely low underneath, way below this, below April, May. So you would buy call all the way down to retest. Buy call here. Say buy call here, you got a little bit money. Buy call here. Let it touch a little bit, but not as much. Right here, I think we took the little Microsoft play, it bounced back up. And right now it's all below because of the bad earning. But it's not at the daily. It hasn't reversed back up above this line yet. You need this above this signal line. So when it does bounce above, when it's touched right here, take it. Underneath, touch the signal line, take the call. Above when it touched, just grab the call. When you need to be above the signal line, just tell you the reversal trend is breaking out. So this right here, yes, it's daily oversold, but it broke out. But it never touched that signal line. It never tell you to buy the call. You need the signal line to be at this point. Same with just right here. See the daily oversold? You see the signal line right here? It tell you, hey, you should grab call. Not grab call here, not because it's oversold. You want to wait for the daily, the CCI, that signal line. All right, Unity. Did it die yesterday? Yeah, it did.
I want you to pull up Unity Weekly. I missed this, and I cannot believe I missed this. So there's 4 candles you always want to know, and those are shooting star, hammer, gravestone, dragonfly. If you see one of those on the weekly, they mean something, especially if they're at the top of an uptrend. So pull up Unity Weekly.
Yep, I'm looking at it.
Okay. Do you see that gravestone, that green gravestone right there?
Yeah.
Yes. Look at what happened. That's at the top of an uptrend. Look what happened the next following weeks. So you could have taken like 2-month out puts and you would have just killed it. You could have even entered on the hammer 2 weeks ago. Yeah, you see that? Isn't that crazy? That's just, yeah, that's just one on the weekly. So with a bigger shadow, it's hammer-ish. Sometimes there is somewhere in between the two, but if they're at the top of an uptrend, 9 times out of 10, you're going to get a move. Now, if you get the reverse, so the upside down version of that at the bottom of a downtrend, then you get a reversal. I saw 2 of these on SPX yesterday. And I met who I don't even know the name of the person that I talked to. But I even messaged him when I saw the second one, and what happened after they came was exactly what they told me what was going to happen. We went up. But yeah, if you see shooting stars, dragonflies, well, if you see shooting stars, or gravestones at the top of an uptrend on a daily or a weekly or even a monthly, you know you can get in a swing. It's almost guaranteed. MSTR, yeah, I don't really look at that. But yeah, I tried to find you a quick example of one.
We can, yeah, on a weekly, this is just all green.
When nothing's telling me anything, I just keep going farther. Like I'll go to the monthly. So you're looking at Google right now?
MU and Google, but this one is MU.
This is MU monthly?
Weekly.
Oh, weekly? MU needs to cool off.
It does. It hit the 427.
That's crazy. It's gone 4 times what it was less than a year ago.
Yeah.
Oh my God. That is absolutely crazy.
From 120, I think I took this to 160, and about
Oh, look at the hammer. Look at the biggest green volume candle. No, go to the left. Go to the left. I mean, move the chart to the left. Look at the very bottom of the downtrend. What's that? Nope. Bottom of the downtrend, hammer. Right there. Nope. You had
right
it.
here.
Yeah, right there. Zoom in. Look what happens after that candle.
Came back up.
It's not magic.
You could say it right here too, but it's
So the
no.
wick is like the opening and the closing of the candle. So on the weekly, it's like the wick up top is like the week opened this high, but we ended up closing the week this low. Or, I mean, it's the wick at the bottom, like price being pushed up. Are we seeing this candle as a hammer? Yeah, this is a hammer that signals reversal. Google it. If you want to know what candles mean, just Google it. If the hammer was upside down, it would be even more bullish. But this is a hammer inside of a bearish engulfing, which it's called Hirami something.
Okay.
I don't know. You
Yeah.
know what I'm talking about, right? Because
Yes,
we
I know
saw
that.
that on Spy Daily and we played it.
I don't think anyone used the Harami pattern.
Yeah, I just if something doesn't make sense to me or if I'm trying to figure out where we're going, like on a daily, weekly, monthly time frame, I will start digging through all of my resources and try to figure something out.
Yeah, take your time. I know, just take your time with the kid's sick, so
I
this
know,
is
I gotta go to the doctor, but yeah, just because that hammer doesn't have a wick at the bottom doesn't mean it doesn't signify a reversal. But if say this is the weekly, right?
yeah.
Okay,
Yes.
so your next weekly candle closed above, the body closed above that hammer. That's somewhat confirmation, but the next week's candle, that really tells you that we're going up. If
Because
that
it's
makes
above
any sense.
it's above
Yes, and it engulfs, well, the one after the hammer can basically slide over and fit on top of the hammer, but the one after that completely engulfs the week before. If that makes sense.
Yeah.
Maybe not. I don't know. I've never really tried to put a lot of this into words, what I see, but yeah, I watch candles all day.
so it's above, breaking out.
Yep. And then, I mean, you have like a bullish dragonfly there on the weekly, and then you had another bullish candle, then you gapped up. And that's consolidation after impulse move. And then impulse move again.
And then you have the 3 white soldiers,
That is an inverted hammer, dude, but
3 right, the 3 green candle right here.
yep, three white soldiers there.
Yeah.
Yeah, so weekly and daily, you can really read them better. I mean, I read them for scalping on the 5-minute, the 30, the 1 hour. I'm always looking for reversals, but I'm not trying to fade the trend. So I usually wait for one of these reversal candles or reversal candle patterns, which is a totally other thing than just reversal candles. It's like a combo of candles that you memorize and they tell you where we're going. But yeah, I have like 5 minutes to get my kids out. I have to take my baby to the doctor because I think she has an ear infection.
So this would be almost like inverted hammer, isn't it? This,
Yep.
That candle with the body, the wick is at
But
the top.
do you see how you can, and it's at the top of an uptrend. So you're wondering, okay, are we going to go down? But the shadow is too big. And basically the shadow, which is the body of the candle, you could slide that right on top of last week's candle and make a bigger candle. So it's really consolidation. It's not a reversal candle because of the prior candle before it. Okay, I gotta go. I'm so sorry.
No problem. All right, good luck. All right, anyone have any other questions? Master MSTR. Oh man, I am watching this one as well. There's a big FEG zone at that 137, give all the way down to at least 120. This huge area between these two. So there's a big trying to time it perfectly is tough. Like that 120. Yeah, I would buy here too. This is on the weekly. Let me go to the daily. Okay. To the daily is I need this to get 137. But on the weekly, but if it can go down, it can go all the way down to that near that 120, 118 zone. Okay, so I would have to take a call right here. That's why I think I took the coin play. Because it went up. Yeah, so we can look, of course, any stocks you want to look. So right here, we took the coin play with Master. It did go up a little bit, like 50, 60%, because of Coinbase CEO, and then Congress don't want to make it into a digital asset. It's just tanking. But that 137, it's not daily oversold, not under reversal signal. I think it's just a false breakout. Because it needs to be above this signal line. You want to buy when it's above the signal line. Daily oversold, right here, above the signal line. You take it, yeah, you make some money on this breakout. All right. So it's only 1 day of green.
I'm gonna text you a picture, okay? So just look at your phone. See if you can get it up there for them.
Okay.
Okay.
Thank you. I will be. So on the monthly, the weekly, not a bullish candle. It's all red. So you see all these red candle right here, followed by 2 green candle. Oh, these patterns. Okay. Save. Okay, it's on the swing channel. So if you notice just on the weekly, if you follow, see a lot of red candle followed by 2 green or 3 green candle, and it doesn't break out above this red line, it's going to go down. That's how bearish patterns. So say right here you have a lot of red candle on the daily, and you follow by 3 green candle, it's going to go red again. Same concept. You need at least 4 green candle for a full reversal. So it has not have any. Right now we all just betting on just taking, support and resistance. But the full breakout is when you have 4 green candle in a row, in 3 to 4 days in a row, and it has to break out above that previous low, which would be, let's say it break out 4 green candle, it needs to break above that 168, 170. So you got that 3 green candle. You know how it's always you have a lot of red candle, followed by 3 green candle is going to be a puts. Same thing. It's still 3 green candle, puts again, making bigger puts, going down faster than it's going up. It needs 3, 1, 2, 3, 4. See how right here that's 4. It break out. That's okay. All right. Let's see Amazon. I think I have my Amazon charts. I think I took the Amazon call when it dips right here for last a couple weeks ago, 2 weeks ago before the earnings run up. It has this really nice trend to January of 2023. I mean, people may hate Amazon or what, but this is on this bottom October. It's always touched. It's making a high again. So for Google on the daily, not there yet. We had the daily oversold, the CCI daily oversold right here, and it came back up, touched the signal line, it goes up, but it's always, so right now it's below this parallel line, this halfway point. So it's not a bullish. You either need to break out on the daily, sit above this, like a need to full body a break above this green line, or wait for a retest around like 225, give or take, or maybe 230, in the next few days, weeks. So Amazon's right now is in the middle point, and it's just had the earning, not good, not bad. So you have candle, still nothing. The weekly, see how it's always in this trend line. Give it a little wiggle room. There. Okay. So we hit the halfway point and just died. forward. Let's see what's my EMA. What's my EMA looking like? Not there yet. Just wait until it hits around 430. I need that. It's almost there. Or buy when it hit the 200 EMA on the daily. Which be around this little trend line, this 4-hour trend line. Okay. Yeah. Any other request? I know it was quick. It was simple. I know it's not much, but hopefully you guys learned something. And I'm gonna put together a few more and try to see if I can do just strategy where we don't make a lot of money. We're gonna do just little investment, short, long-term passive income. How about that? I would call it the passive income. You don't need a Roth. You can just have like, let's say 10,000. We're gonna do a passive hard. We are not gonna cash it out. We are not gonna put more money into it. We are just gonna buy shares. We're gonna I'm gonna show you how to do sales premium. Maybe do a COVID sales puts or COVID call on a cheap stocks. These are my sweet spot because I don't need 64,000 or 10,000. I just need the COVID. Just meaning I need about maybe $1,000 or $2,000 to buy 100 shares. I am gonna make, if it goes up, if I'm doing a COVID sales puts, long term, it go up a few dollars, I'm gonna make 20-30%. I don't need 1,000%. Now that's gonna be just low income. I mean, just 4 charts, there's only maybe 4 or 5 red plays. Yes, these are some of the newer stuff that I just bought up. ATLX, I'm red a little bit. UNH had bad earning, but I bought it at 310 and went up to 350. But I also have my passive income, my dividends. Yeah, of course, anytime. So, and then you can play your straight up ODT, cover call, play your straight up puts, straight up call, and then you just add different elements and find the one that works for you. Where's my dividend? So just one, you get money. You just they will pay you, haven't owned the shares. You need to just own the shares, and then it just they just give you cash up, and then what you do with it is up to you. You can either reinvest into it and buy something new, or you can buy the same stocks again and just add up your averages, keep going higher. Have a mixture of different groups. Railroad stocks and oil have the highest dividends stocks, and those are your Warren Buffett stocks. I mean, it's not little. I mean, it's very little. It's like $2. I mean, yeah, but it's for doing nothing. And if you can somehow make more than 20% on your passive income, you are beating the stock markets. If you are trading just for the last 2 years and you're going red or just breaking even, give your money to a financial advisor and let them invest for you. This is, I want you guys to be able to turn this into just almost 100% in a year. That's to start with 100 shares, 50 shares. I don't, just slowly, 50,000, just throw 10, 100,000. So with a small piece of it, shares at SoFi when it was like 15, I bought it. I'm like, okay, it went up to $30. Do you want to sell it? It's up to you. But if you want to cash out 20 shares, hold on the rest hundreds or the last 50 shares, the long term path is you're gonna make a little bit more money. But yeah, all right, guys. Hope you have a good. Thanks for joining me. And John, yeah, we are pretty much wrapping up. So thanks. It's gonna be recorded, so I'll post this. All right. Have a good weekend, everyone.